Good afternoon, ladies and
Jesteśmy
gentlemen.
uśmiechnięci, bo jest
We
nam
are
niezmiernie miło
smiling,
Państwa
as you
witać w
can see,
Warszawie
because we are
po tylu
happy to welcome you
miesiącach
in Warsaw
i
after
tygodniach
so many months
naszego
and
oczekiwania na to
weeks
spotkanie taką
of
twarzą w twarz
waiting
z
for
Państwem.
this
Jest nam
meeting
właśnie
with
z tego
you,
powodu
for this
niezmiernie miło. Do tej pory,
on-site meeting.
od czasu pandemii, wszystkie konferencje
And
nasze wynikowe były
previously, due to the pandemic,
internetu,
all of
online.
our conferences were
Więc,
organized
drodzy Państwo,
virtually.
to jest pierwsza po tak
And
długim czasie,
that's
kiedy
the
możemy się
very
spotkać.
first one after a
Oczywiście nasza
long
konferencja
time
jest
where we can meet
transmitowana.
on site.
Wiemy, że
We are
sporo
being
dziennikarzy wybrało też
broadcast,
taką drogę
and I know that
oglądania
many
nas,
of you
a nie bycia
prefer
tutaj.
to watch us
Napływają
live
też
rather
pytania
than
od
to be here physically.
poszczególnych
We
redakcji.
are also
Będziemy je
receiving
oczywiście
questions from
czytać i
journalists.
Państwu
We are going
online
to read them out
odpowiadać i
and
witamy bardzo
answer them
serdecznie
on an ongoing
przedstawicieli
basis.
mediów, tych, którzy są
Welcome
tutaj z
all of
nami
the media
na
representatives
terenie
who have
giełdy
decided to
papierów
join
wartościowych.
us here at the
Pozwolę sobie
Warsaw Stock
przywitać
Exchange. Now let
gospodarzy
me
naszej
welcome the
konferencji, pana
hosts of
prezesa
the
Jarosława
conference,
Wróbla,
CEO
wiceprezesa
Jarosław
zarządu do spraw
Wróbel, Vice
inwestycji i innowacji
President for
Grupy LOTOS oczywiście.
Investment
Dzień dobry,
and
panie
Innovation
prezesie.
at Lotos Group.
Pana dyrektora wykonawczego
Also,
do spraw
Executive
finansów Grupy
Director
LOTOS,
for
Łukasza Minuta. Dzień dobry, panie
Finances,
dyrektorze.
Łukasz Minut.
Wojtka Zengtellera,
And
szefa Biura
Wojciech
Relacji Inwestorskich.
Zengteller,
Witamy bardzo
head
serdecznie,
of
Wojtku.
the
Ja
Investors
nazywam się Adam
Relations.
Kasprzyk, jestem
And my
dyrektorem
name
do
is
spraw
Adam
komunikacji.
Kasprzyk
Witam
and
bardzo
I'm head
serdecznie.
for
I jeszcze
communication.
przypominam, czekamy również
And
na
let
Państwa
me
pytania,
remind you
które
that
będą
we are waiting
zadawane tutaj
for
podczas
your
naszego
questions
spotkania,
and
jak i też
queries. You
za
can ask
pomocą
them here
poczty
or
internetowej
via email.
media@grupalotos.pl.
Please write
Czekamy na
to
Państwa
media
pytania.
at
Panie prezesie,
lotosgroup.pl. So, why don't we start? Hello, ladies and gentlemen. This is a great honor for me, together with my co-employees, to present the results of Lotos Group for the first half of 2021. And, well, let's be frank, these results are the best that we have ever seen in the history of the Lotos Group. If you have a look at the results, you can come to the conclusion that we have been able to recover as compared to the year 2020. Internally, we have conducted some thorough analysis of that improved situation after that first half. Well, it is our opinion that there are several factors at stake here. First of all, an external reason. It's about the crude oil listings and gas listings on global markets. That's also related to petroleum commodities. If you analyze our situation, and in just a moment you're going to learn more how individual business segments have reacted. And you will see that apart from the commodity prices of oil-related products, another important factor is the ability of our team to take advantage of the emerging market situations and opportunities. So across the recent years and months, we've learned how to maneuver in various market niche areas, especially as regards using gasoline, base oils, and fuel and naphtha. So this shows that our ability to use these rates and the dynamics and to use 100% of our production capacities of the refinery of Lotos, this all has translated into these great results. Whether they will be satisfactory to our shareholders, well, it's for them to say, and it's for you as the media to assess. You, after all, will be responsible for evaluating our results. I would like to draw your attention to one element. You must know that we acted in a very specific time frame. As you know, In parallel, there is the merger process going on. 12th of May 2021 is the day when a letter of intent was signed between the state treasury companies, that is Lotos, Orlen, and PGNiG as regards a merger under the umbrella of the state treasury, the main stake shareholder. The presented model, in fact, will be about incorporating our group. We accelerated all of our organizational activities in all regards concerning full execution of the declaration and commitments from May the 12th, 2021. And as of today, I can proudly say that the Lotos Group has had no delays when it comes to providing materials and restructuring efforts of our company. The intention is to prepare the company to be incorporated in the multi-energy holding in the process conducted mainly by PKN Orlen. Also, it is no secret that the deadline for corrective measures was moved to November 14th, 2021. So right now, after the preparatory phase, we are now entering the decision-making process so that we can fulfill all the commitments until the 14th of November, so that PKN Orlen can notify completion of all corrective measures. The data that you're going to see on the slide showing EBITDA LIFO, which is about 1 billion zloty, and the result 6 billion zlotys. So all of that shows that we have the best results ever achieved in the history of the capital group of Lotos. Now, how we achieved that, you're going to learn in just a moment. My colleagues will refer that to you in detail. And to end my introduction and invite you into a discussion, let me inform you about one important piece of information, which is all of the activities, including acceleration of restructuring that started in March 2021 and next months, as well as the smooth implementation of shutdowns and transitioning to the so-called half shutdown, proved to be very efficient, half maintenance shutdown. And as a result, we can say that these days we have laid great foundations to carry out a very innovative development strategy when it comes to investment and capex, so that being part of a multi-energy holding, in the next several years, we will be able to implement centers of excellence, competence centers based on base oils, hydrogen logistics, and investment and maintenance services as part of the sea offshore wind farm program, because that's where we want to make money on. This has been the case in the first 6 months this year, and you're going to learn more in just a moment from my colleagues. Thank you. Ladies and gentlemen, please go to slide number 4 so that you can have a broad outlook on the whole half year. EBITDA LIFO, clean EBITDA LIFO, less one-off events, is about 1.6 million zloty, You can see also here on the left the cash flows from operational activities. There were some huge fluctuations in that parameter. So looking at the numbers in Q3, you could have some question marks, but it was about the price of crude oil, and so we had to involve more capital. But after 6 months, it's 800 million. Now, when it comes to processed crude oil in the refinery in Gdańsk, have a look at the right-hand side. It confirms the period of shutdown that was necessary due to the maintenance activities. Daily production of hydrocarbons was lower, you can see here, and that's the result because of lower extraction from Utgar field. That field actually started at the end of 2019, and it shows quite an intense drop. Last year, the production was much higher than this one, and now this is broken down into quarters. This is second quarter. Looking at the growth rate for EBITDA LIFO for Q2 2021, on the left-hand side, you can see here we are barely at the bottom, and this year it's great. It's almost 1 billion zloty. Here, let me tell you about some LIFO methodological implications. That means that it's neither great because we had the so-called cheap layers of crude oil that actually lowered the costs, but also last year it was not that bad as the results shows, because at that time we had the so-called expensive oil layers that actually lowered the result by about 300 million. Now, on the left-hand side, you can see here our net debt vis-a-vis EBITDA LIFO. Now it's back at a safe value of about 1. And let me remind you that at the end of Q1 it was 2.7, but this was only a temporary situation, the confirmation of which is precisely that chart. So that was my introduction. Now I'm going to move on and pass the floor to my colleague who will tell you more about consolidated financial results. Please go to slide number 7. Now we are talking in a more detailed way about financial. Let's first talk about some fundamentals from the market so that we can know what impacted our results. Well, there is a reason why we are presenting at the bottom of that slide some details on passenger air traffic. Because if you look at how the crack spread was developing, then 60% are the middle distillates, and the chart below shows how material the demand for jet fuel was, and it was very much impacted by the COVID-19 restrictions imposed globally, including the restrictions on air traffic. 3 months back, we thought that this restriction in the passenger air traffic was 67%. As compared to the end of 2019, but after 3 months we can now say that the recovery of that market actually only improved by 7 percentage points, not more. And I'm going to return to that topic later on as well. So please bear in mind that even though we have a certain back to normal after the waves of the pandemic, the fundamentals on the market affecting our refinery has not recovered yet. And actually there is still a long way ahead of us before we get back to the desired crack spread rates. And in the upper part of the slide, you can see global consumption of crude oil. And here, similarly, we can see a quicker recovery than the one of the passenger air traffic. After 6 quarters of the new pandemic reality, we still see that the consumption is as much as 6% lower than the equivalent rate in 2019. So now let us move to slide number 8. We wanted to tell you more how these external circumstances affect our strategic assumptions. When planning the strategy for Lotos in 2016, no one ever was able to foresee what would happen in 2019, 20, and in the beginning of 21. Still, if you break down this slide into 2 parts, where the left-hand side is about key fundamentals responsible for generating the result in our exploration and production segment, I think we have been quite precise in that area. The first half of 2021 showed $65 per barrel rate, and 67 was the highest one predicted. Importantly, the rates of natural gas are actually higher than the ones we assumed. It's $44, whereby we assumed it would be 42. That presents the very first leg of our business, that is the stable part of exploration and production. Still, on the right-hand side, which shows the refining and which shows the downstream market, you can see here much more demanding fundamentals. Let's start with gasoline. Here the ratings are much more lower than our strategic assumptions by 36%. So product cracks, actually, it's $115 vis-a-vis $179 that we assumed in our strategy. And the parameter that these days causes a great margin loss, which is the diesel. You can see here that in the structure of our production, it accounts for over 60% of our ready product production. This dramatic drop of margin rate for middle distillates, 68%, generates a huge result gap vis-a-vis the assumptions that we took when designing our strategy. The pressure generated on the market resulting from oversupply of distillates because of the air traffic restrictions is the highest challenge for us these days. When you think about product cracks on heavy fuel, this is heavy oil, it's still very difficult. In that case, actually, it's the other way around, because the negative product crack dropped by 41%, and it was minus 137 vis-a-vis the assumed minus 231. Now let me move on to the other macroeconomic fundamentals.
And let me begin by showing you a diagram that's slightly different than the rest as it applies to currency exchange rates. I have to admit that we are living in a relatively stable environment in that regard. Looking at one particular period, Q2 of 2020, please look at the diagram and note that the fluctuation of exchange rates between US dollars and Polish zloty was practically non-existent, as we are talking about the fluctuation of about 5 groszy, which makes it very easy to smoothen the exchange rates and does not affect the financial results of our group. The 3 following diagrams should be analyzed in combination, starting with our GDP and the way it increased We are still working with certain forecasts that had been published in the past and are still available and used by us. The forecasts suggest that the second quarter of 2021 brought an 11% increase in GDP of our country, which automatically and directly translates into an increase in demand for fuels. For many years now, we've been observing a correlation between the GDP, its level, and the consumption of fuels. And even more importantly for us, both the consumption of diesel and gasoline not only exceeded the levels observed in the previous year, but also exceeded the consumption in the comparable period of 2019. So in terms of our local market, can say that the restrictions we've been seeing have actually been compensated, and the market has bounced back. So to summarize the macroeconomic environment, I would like to say that the assumptions we have just analyzed in connection with our strategic plans can be observed looking at certain trends we've been seeing in the last 2 years. On the left-hand side, you can see the crucial assumptions for the exploration and production segment. For the last 5 months, we've been talking about a growing trend for crude oil and natural gas prices. This trend continues and the prices develop very positively for the Lotos Group. At the same time, for the refining and marketing part, we can say that the macroeconomic environment is quite demanding. And as you can see in red on this diagram is a development which is quite negative, because it is quite flat and it represents the crude spreads for our products, for diesel and gasoline. So that would be all from me, and now I would like to hand over to Wojciech. Thank you very much. I would like to talk to you about some reporting data and about some trends in prices of crude oil and natural gas. These trends obviously translate into our financial results in the exploration and production segment. 400 million zloty, which is a growth by 66% year on year. In the second quarter, the EBITDA is by 33% higher. It is a very high parameter, a huge difference between from 60 to 250. What Director Minut said, talking about his slides, especially for natural gas, is true also for crude oil, and that translated into these very dynamic growths. But obviously it is not just that in the exploration segment we depend on what the market gives us. Of course, we are an active party as well, and our actions and our achievements have an impact on these results as well. The Utgard field, which produced less than we expected in the past, we were able to recover in that field. We were able to activate one hole which used to be inactive in the past. It's been a great success, and only yesterday Norwegian authorities issued a consent and license for Repsol, an operator, to start producing in that oil field. And we are expecting to start the production to start in Q4. In light of yesterday's information, the start of production in Q4 becomes even more probable. And the next slide, this is slide number 13, shows you some standard information from all our production assets. I'm not going to go through all of them in detail, but please, I would like to ask you to have a look at the B4. 2.2 thousand BOE per day represents a huge increase compared to previous quarters, and it's in line with what we predicted. after we intervened and tried to reopen some holes, some parts of the field that were inactive in the past. We can do that because of a platform we bought from Maersk, and it is operational, and it helps us to increase the potential and increase the production in this field. Another element I would like to draw your attention to, these are the costs of production. In Norway, the lifting costs are no longer single-digit amounts. The share of costs of payment cost is increasing, but because of the oil prices, about $70 per barrel, we are still in the safe area. So here, overall production figures, we are reaching the mix of production we have been striving for. It has been developing at the level of 70 to 30 gas to crude oil. We are trying to increase the share of oil. We've been successful in doing that. Recently, it's been more or less half. The level of gas prices increased in the past, even higher than the figures we've been showing you. Because of that, we are achieving a sort of automatic balancing, because the increase in gas prices increases the cost of operation of the Gdańsk refinery, because gas is its main source of energy. But on the other hand, these costs are in part compensated by an increase in revenue in the exploration and production sector, and in gas marketing Norwegian continental shelf. Our quarterly production, compared to the reserves, can give us a sort of overview and makes us able to predict how long we can continue producing based on the existing deposits and field, and we are quite confident that we will be able to produce for more than a dozen years. This also reflects the macroeconomic situation of last year and the current macroeconomic situation, to which we actively respond with different operations. 1 year ago, because of the drops in the crude oil prices, we had to depreciate our assets as a result of some measurements and tests we run. But what happened this year, in the context of increasing prices, after performing the same measurements and tests, it turned out that we can generate a higher cash flow. That's why we moved in the opposite direction. Of course, if we see drops, we can see what happens. We can see a negative EBIT, and then when we see increases, it is in a way artificially pushed up, but this is how accounting works. This is just to show you how we operate commercially. That's why we included these elements, so that you can see how much money we actually make on our fields. So when we look at the perspective of 6 months, the proportions will be similar. Increased by 66%, almost 400 million operating profits, and a strong contributor to the overall result of the group. Now refining and marketing 1.2 billion in the first 6 months of this year, a very good result, and President Wróbel mentioned it as well and listed all elements which help us to use our competitive advantage and generate such great profits. Of course, we communicate very openly about any distortions. We can note that are caused by some accounting conventions and methods which make our results, which affect our results, such as the effect of cheap or expensive or layers. And so what we've seen last year was the effect of the decreasing trend and this year. This is the effect of an increasing trend. We are very open about that in our communications. So the shutdown due to maintenance has already been discussed by President Wróbel. I would just like to give you a few figures about that. Let me remind you that we are talking about costs of about 130 million. And right now, these costs after the first 6 months have reached about 90 million. But this is not the end, despite the fact that the shutdown is over. But we still receive some invoices, so we will continue incurring costs. After the 9th month, we will know how high the costs have been and how disciplined we have been able to be during the maintenance process. Now, the yield structure. Compared to a model barrel, we all know that within the refinery we are not able to go from 10% to 25% overnight, but the movement from 12 to 13% was our response to market developments in order to use the emerging opportunities. Results after 6 months of 2021 in the segment, 1.2 billion, as I said, with a major contribution of retail with more than 100 million, and the growing network and the growing quality of our network has been important. Our marketing activities, raising awareness of the brand, improved efficiency, especially in marketing of non-fuel products, have been very helpful in that. And now, 3-month perspective, 3-quarter perspective. So, comparison with the previous quarter and the same quarter in the previous year. A huge contribution of non-fuel products, base oils, were a chance on the market, which we have been able to use, and we have been developing our competencies not only based on the macro prices, by strengthening our relations with partners. The product is exported mostly to Western European market. The perception of our product is very good. We want to be seen as a reliable partner, so we don't want to see this product as a commodity that is just sold behind the door of the refinery. We've been able to do it, which translated into very good result. But of course, I would also like to add that the prices of these products have been very good in general. Our model refining margin in the second quarter 2021 is slightly different from the actual effective margin we generate. Maybe a word of comment about middle fractions based on diesel prices. And this group includes bales oil. So why is it included in this group of products? Because historically speaking, when you look at the prices of one and the other, it was relatively similar, even the same. Right now, the situation has slightly changed, and we've seen some differences between the prices of base oils. That's why we are above the model refining margin. But let me emphasize, we are talking of the model refining margin. So this is an instrument which allows us to monitor trends in the results of different companies of our group, but it is not identical with the model margin achieved by the entire company, and it would be misleading to just use it and multiply it by the number of barrels processed in a given period.
No, that's it when it comes to the segment outlook, and now consolidated financial results. Thank you. Ladies and gentlemen, it's a great pleasure and honor to sum up the results discussed in detail just a moment ago by Mrs. Keller. Summing up the consolidated results of the Lotos Group and looking at the last 6 months of 2021, please remember about the main factors that were previously described. Remember, we are still living in the reality of pandemic restrictions. The result that we've been able to generate was generated in 6 months that were still full of restrictions, plus the maintenance shutdown that created a great logistic, operational, and security channel. It cost us huge amount of work, and we were still able to deliver that big result under this great pressure of dramatically low crack spreads on fuel oil. Now, the operating result, which is the EBIT generated in the 6 months, was 1.9 billion zlotys. The LIFO result that was supposed to be less of the inventories that we have accumulated, of course, with the inventories, adjusted the result by about 600 million zloty. Now, Wojciech mentioned also some deviations caused in that recent half year by cheap oil layers. That in fact, should be a bit higher. Now, one of events observed in the first 6 months are related to the events quoted for Q2, which in practice means that if you analyze the chart, we speak of 2 major events. So first of all, well, they've been analyzed in long term as forecasts for the results for fields located in the Baltic Sea, mainly B3 and B8 fields. Now, the reverse values of the assets was 240 million zloty. And additionally, this clean EBITDA is less of depreciation, accounting for about 500 million zloty. These rates sum up our activity. As a result, 1.6 billion zloty is clean EBITDA according to LIFO methodology. That's the deliverable that we've achieved. Now let me move on to the next slide. Q2 accounts for the major events. So the executed result is 1.2 billion zloty. Now LIFO effect is about 312 one-off events, including write-offs, reverse write-offs, 213 million zloty. Depreciation accounts for about half of that rate, which is 255 million zloty, and clean EBITDA LIFO 981 million zloty. Now let's move on to the cash flows that we've been able to generate. Now you can see here some fluctuation, some changes in Q2. You can see here on that slide it's quite huge. The most important factor that is behind that area is the maintenance shutdown, which caused shutting down the refinery process. And still, we had to keep up all the supply chains, also ensure availability of the product to our final customers. And therefore, the preparation for the shutdown always involves a great challenge, that is to ensure product availability for customers. Another challenge is to ensure financing for, it means we need to freeze additional working capital. This situation, of course, reversed in Q2 2021, where we were able to release that frozen capital. And additionally, the results generated in Q1 and Q2 also impacted the generated cash flows by operational activity and accumulated rate here is about 800 million zloty. Now, development activity of the Lotos Group in the 6 months of 2021 involved over 440 million zloty that was allocated to development projects. So about 200 million of it is the capex for exploration and production, and when it comes to exploration, it's mostly focused on Norwegian resources, 135 million. Now, when it comes to refining and marketing, it's 70 million out of this 193. It's this involved the shutdown period. In the middle of the chart, you can see here capex in the retail chain. It accounts for 70 million zloty. This is a relatively high area, a high level of capex. The development program of our stations, especially fuel stations, highway stations in the first months. So if you compare these values to the similar period from 2020 or 2019, you will see here a clear increase. And the final slide summing up our balance sheet data, in which in the crises situations where we see huge fluctuations, it's very important. That is the net. What is the net debt level? At the end of June 2021, including all of the regulations imposed by the MSSF 16, including leasing liabilities, lies at 1.8 billion zloty. Now, the net debt regarding credits accounts for 500 million zloty at the end of the year, and you can see here a clear drop in the debt that we have and a relative stable level of forex. Now, if you look at debt indicators, net debt vis-a-vis our own capital, you can see here a drop of that indicator, including our leasing liabilities. The Lotos Group went down to the level of 14% of the debt indicator. If you take leasing liabilities out of it, it will be actually only 4%. Now, the final indicator that was also quoted on slide 3, as far as I recall, is the net debt vis-a-vis LIFO EBITDA. It's a very satisfactory rate. It's 0.8, and this, in fact, is driven by an outstanding EBITDA LIFO result and a very solid net result that regarding our own capital. Now, if you look at the net debt, the generated cash allowed us to lower the rate that you can see at the end of Q2 2021. And I think that's it from me. Thank you very much. Indeed, ladies and gentlemen, let me open the Q&A session. Let's start with the questions of the journalists that are present with us following the developments online. Polska Agencja Prasowa, Polish Press Agency. The question is about the expectations regarding Q3. What is the macroeconomic situation, and can you repeat the result from Q2? Thank you very much for your question, sir. Well, if you can give credit to the predictions of some agencies like the ones published today, then one of the investment banks presumes that the average price for Brent barrel in Q3 2021 will be about $80. So that's my answer to one of your questions. This average price in the first half of 2021 was 63 or 67, as far as I recall. So that's the prediction of the macroeconomic situation. On the other hand, analysts say that Q3 might show some important fluctuations in the rate for the barrel at different points of time. There is the Chinese factor about some downturn in the demand. It was, however, discounted by the industrial situation on other continents. That's what the analysts say. So, directly speaking, we don't expect a great catastrophe in the macroeconomic situation in 2021 Q3. Obviously, our group has some good asset, which is the jet fuel mentioned before. So, should the air traffic be more resumed? And well, of course, we never know. There might be some further mutations, and we don't know how they will be treated by the WHO and governments of different states. We don't know whether countries will open or close their borders, or whether there will be any other method of combating the virus using some medications or vaccinations. As far as I know, looking at what my team thinks, there should be no strong deterioration in Q3 as compared to Q1 and Q2 of 2021. Thank you very much, sir. So let me now read out another question, and then I will take questions from the floor. Piotr Apanowicz. Actually, we have two questions. The first one, what is the total capex expected in 2021? Are you going to deliver the 1.3 or 1.4 billion zloty until the end of the year? And the second question, when can you expect splitting of the refinery in Gdańsk into another company to merge with PKN Orlen? One of the questions will be answered by me, and the other will be addressed by director.
Ladies and gentlemen, we do have some predictions. The current prediction says that the capex expected in 2021 will amount to more or less 1.4 billion zloty. Thank you. And the second question, well, as regards the establishment of the JV company, which is separation of the refinery, or in a way re-establishing it. Actually, I wanted to say thank you for this question, because I think we've seen some myths about it. The situation right now is quite peculiar, because everyone talks about the Gdańsk refinery, but hardly anyone knows that in terms of technological processes, we are talking about two companies. The refinery belongs to the Lotos Group, and EFRA, the second part, belongs to Lotos Asphalt, which was caused by the fact that a few years back, when the EFRA project started, there was no other possibility to make it work financially for EFRA than to include it in Lotos Asphalt, because of the costs of operations of the 10 plus the first part. And this is why this arrangement was introduced. What we are doing today is nothing else but just re-establishing the refinery as a single company, a single unit, a single technological process. This is what the JV project is about. And right now I can tell you just one thing. As I said almost an hour ago at the beginning of this conference, the Lotos Group is consistent in implementing a scenario we have planned. And as regards the Lotos Group, all our activities, all the remedies we are implementing by the 14th of November 2021 will be implemented. What happens after that and how the process will continue will depend on our stakeholders, most of all, because they are the ones making the decisions. So it will be up to them to decide at what rate the process will continue, and the management of the Lotos Group will be prepared for all possibilities and are prepared to take all actions that are necessary to create the JV as a separate company, which then might be used as a part of one of the remedies. Are there any more questions? Please wait for the microphone. Good afternoon, ladies and gentlemen. My name is Mariusz Marszałkowski from Business Alert. I have a number of questions. Should I read all of them or one by one? Well, maybe one by one, then maybe we can have a more lively discussion. My first question is, when are you planning the next half-time maintenance shutdown for the Gdańsk refinery in March next year? Second question, a more difficult one, because it applies to some compensation for dirty oil, impure oil from Russia. I did not see any effects in your financial results, but are you planning anything? Are you planning to go to court about it? Well, we are still in negotiations about contaminated oil, and as long as the negotiations continue, and I told you a few months back that it is simply good manners not to make information public before such negotiations are completed, because we don't want to use the media in such negotiations or in communication with the other party. But as soon as the negotiations are over, we will inform you. Question number 3, what is the structure of crude oil imported to the Gdańsk refinery in this year? And so please, Director, would you like to respond to that? Yes, thank you very much. We are active in trying to diversify this structure, and we use all the opportunities we see emerging and make decisions, of course, in line with our decisions that concern optimization of our processes. So not only the Ural oil is included in our product mix, but from the technological perspective, bearing in mind that we are now operating in a new configuration with new facilities, it is practical to use oil that our experts are familiar with, which is mainly Russian oil. And that means that the amount of Russian oil is probably slightly higher than it normally would be, but this is not the only kind we are using. We are diversifying and optimizing all the time. Thank you. My next question is about the incorporation of Lotos to the Orlen group. You used this word. Can you elaborate on that? Well, what I said was actually a quote for what we received in a communication after the contract agreement was signed on May 12th. I don't want this conference to develop into a conference about the merger between Lotos, PGING and Orlen, because we are focusing on our financial results today. Well, obviously, an important element of the development in the first half of 2021 was the fact that on the 12th of May, this agreement was signed. And it was a very strong signal that referred to two important areas. First of all, this process will not be about PK and Orlen buying the shares of Lotos. It is going to be a cashless transaction. The final structure of the transaction will be communicated later. The second area, also very important, and that's why it was clearly addressed, is linked to the centers of excellence I talked about. So I would like to focus on Lotos in this regard. Lotos will play a major role in the area of base oils, and we will have the competence center for that. Also, one of the competence centers of excellence for hydrogen will be within our group. Also, as regards the question of railway logistics and investments and maintenance services as part of the implementation of the offshore wind farms program. So all our investment efforts right now are being redirected in order to, of course, not forgetting what we make money on, but also we try to redirect to become more correlated to these future centers of excellence. And we and the entire management are being very humble about the results we are showing you, because we see them as a huge challenge for the entire Lotos team, because we don't want to disappoint our shareholders in the future. And it is very clear when we look at 2021 that a refinery and the Lotos petrol stations are very vulnerable to fluctuations in natural oil and natural gas and crude oil prices. So the only solution that will allow us to compensate for these fluctuations will be, on the one hand, to deepen and extend the value chain as regards processing crude oil, and this is what we are trying to do by developing in the field of base oil. But on the other hand, entering new areas that will stabilize our financial situation, even if natural gas and crude oil prices should fluctuate. We know that the European Commission announced that 2035 will bring the end of production of traditional car engines, if I can describe it in this way, and will start of the zero emissions era, which means a significant acceleration of this process, which shows us that we have to use this decade to develop the hydrogen-based technologies and hydrogen logistics, and we have to invest even more in offshore wind energy. If we don't do it, then both upstream and downstream, as we know it today, in 10 or 15 years' time, will be at the end of a downward trend. That's why we have to regroup. That's why we are investing in these areas so much. Thank you for your answer. Two more questions. You have been talking a little bit about your investments in the north, in Norway, Northern Sea. What is the future of Lotos in Lithuania? We know that the production there has been decreasing consistently, and so have investments. So what is your view of the future of Lotos in Lithuania? Well, we are talking about a considerable challenge here, also from the point of view of the regulatory bodies and the Lithuanian government. We know that as regards the Lithuanian upstream, so far the Lithuanian government has not developed clear legal frameworks that would make it easy to implement upstream activities there. And also via the GoNafta company, we have been receiving signals that there is no, let me say, permission for the exploration and production for hydrocarbons. If we see a new opening and a new approach on the political level, if the Lithuanian government and parliament decide to open up and create a legal framework that will ensure some security for business operations there, then we will be more willing to take investment risks. But it will all depend on what the Lithuanian authorities do, whether or not they are prepared to give us some legal guarantees and legal security for doing business there. And when can we expect the final decision about the LNG terminal in Gdańsk? When can we expect the final decision? So as regards the LNG terminal, the analyses are still in progress. The Martwa Wisła River terminal is in preparation, but this is something completely different, as it is tied to the HBO investment and the hydrogen investment, because this is where we would like to locate our hydrogen logistics. As regards the small LNG terminal, the analyses are still ongoing. So the decision in the end will be based on the economic effect. You have to strike the right balance between investment risks, knowing that the market is developing very dynamically, but we also have to have a certain level of ROI, because the reason we do business is that we want our shareholders to be happy. And they will be happy if the ROI is at an expected level. So I expect that we will see the final decision until the end of this year, whether or not we will go for it. So, or whether we will decide to go right or left. Thank you very much. Are there any other questions, please? Jakub Wiech, Energy 24. I have two questions. The first one in the context of what you have been talking about, a hydrogen project. So where is this project right now, and how do you see the role of the Center of Excellence? You've been talking about, well, that depends on which hydrogen project you're asking about, because it so happens that the Lotos Group has, for many years, because we're not talking about the last few months, in the last few months, we have seen a huge acceleration in implementation of the hydrogen projects we have been working on, and also in terms of designing and planning other new hydrogen projects. So let me respond to that maybe in the right order. Let me begin by talking about the hydrogen recovery project, the huge project we're able to complete in the first quarter of 2021, which improves the production and capture of hydrogen, entire production, but also from the point of view of oil, gasoline. It improves the efficiency of the entire process.
So this has been closed successfully. We also have two flagship projects carried out and co-funded by EU funds. Or we are now in the process of applying for such funds, and the best one is the green hydrogen project. It's about constructing a huge electrolyzer, about 100 megawatts from PV, using PV panels. So it's about processing clean energy and storing that energy. So, right now we are in the final stage of applying for EU funding. Depending on the amount of final funding that we get, we presume that the call will be decided until the end of the year. So, looking at the schedule, the shortlisted candidates should sign final agreements until the end of the year. And we have been shortlisted. We have received very positive results, chosen among the best 70 European projects. This is stage 2 now. So we are applying for funding up to 80 million euros, which is not peanuts, and looking at the estimated project size amounting to about 1 billion zloty. And I'm saying that on purpose because this might change due to various conditionalities related to PV and feeding that energy to PSE grid where it is supposed to be used. So that's one thing. Another one is a big project that we've been conducting right now. We are now finalizing purchasing. It's Pure H2 project. It's about erecting a hydrogen cleaning installation so that it can be used for communication, and it's about setting up a whole system of transporting hydrogen to 2 selected stations. And they are now being in the final stage of procurement of fuel infrastructure. It's about infrastructure to tank hydrogen used for transport. Now, whether we want to specialize in that traffic hydrogen, well, we have planned some stages, starting from the grey hydrogen and cleaning it to 5/9 so that it can be used for transport. Right now we are initiating a host of projects, and I can't unfortunately say that out loud whom we are partnering with, but probably until the end of the year you're going to learn who our partners will be in that project. And so also for the railway transport, heavy transport, and road transport, including also heavy sea transport by ships, by vessels. The Lotos refinery group is located right at the seaside, so we are very close to the Gdańsk port harbor. We want to use this geographic location to build a terminal on the dead Vistula River and expand tanking vessels of different size with hydrogen. These projects are accelerating as we speak. A multitude of projects that we carry out regard also the logistic process, both in terms of hydrogen, but also managing using IT platforms the whole quality assurance chain and monitoring, as well as settling and balancing of biomethane and grey hydrogen. This is also in line with the national goal of reducing carbon emissions. Also looking at the production, we want to generate proper rates for the whole value chain using biohydrogen. What we've observed is an increase of queries by potential customers. They ask about what is the share of biofuel in our mix. So the question is, what is the readiness of the customers to pay for the inclusion of that bio component? However, that's the fact. More and more customers ask about the share of renewables or other bio components and bioresources in our products. Thank you. And the final one, looking at green energy and renewables, as well as being so close to the sea, as you said, is there a chance that Petro Baltic is part of the offshore project, acting as an operator for investment services for the whole country. Yes, we do perceive such a chance, and right now, as we speak, we are working hard on designing a proper concept of how we could use the potential of Petrol Baltic in such a program. Still, ladies and gentlemen, to do that, we would first need to build up proper competence at Petrol Baltic, and you can't do that being far away from the market. So it's actually quite a complex process. In my opinion, first, we need to confirm actual demand by end customers for the services of Petrol Baltic. And that's what we've been working on. I hope that in the next months you will come to the conclusion that our work has been quite successful. Another fact is that we need proper equipment, financial competence, and also manpower at Petrol Baltic. To make Petrol Baltic into a good investment service operator, to maintain infrastructure, this requires quite a huge number of people that we would need to acquire or that we would need to retrain. And then, in the end, Petrol Baltica would need to leave the classical upstream segment and change their industry. We are, of course, speaking more about the next decade to come, where we want to use the years to come to really prepare the company so that maybe by 2025 or 2026, they will be ready to take up the role of an operator. We are doing that by building up competence, using the competence the company already has, and slowly but steadily moving through all the stages so that it becomes a serious market player. Thank you very much. Ladies and gentlemen, thank you very much for this meeting. Thank you to all the journalists that were present with us physically, but also those following us online and asking questions via emails. Thank you for this meeting here at the Warsaw Stock Exchange. And let's have some informal talks. We are available here. Our Director for Innovation and Investment is here and is going to stay. You can approach us if you have further questions, and we are looking forward to talking to you. And then we remind you that you can see here on the desk the names of the speakers, the whole Mr. Adam Kasprzyk, Jarosław Wróbel, Łukasz Minut, and Wojciech Zędga.